Well, good morning then everyone as we head into European trade on Thursday the 8th of February. We'll have a look across markets and see what's going on, what's up, what's down. Another relatively quiet overnight session. Not too much going through markets over the course of this week. Sort of a lack of fresh kind of fundamental news flow. So we'll try to break down what's gone through Chinese data, really the main focus of attention. Overnight, consumer prices, certainly the year-over-year figure, decreased at the largest pace since like 14 years, which is obviously then kind of back just after the global financial crisis. So now it's been a long time since we've seen inflation struggling this bad in China. Obviously, Chinese historically have had pretty solid levels of inflation as they've had to play catch up with the kind of Western world in terms of the size of their economy. So does that it kind of makes you think, like, going across the rest of the world. I mean, that continues to happen. Inflation continues to trend lower in China, although the month-over-month figure is still 0.3, so still kind of month-over-month still growing, but from where it was a year ago. They've had 4 or 5 months in a row now where they've had negative prints compared to a year ago. So, that's something that's likely to filter through into global markets. Or global economy. Sorry, with the Chinese. You see, a lot of things you buy are just made in China. You see there be a tag somewhere on the inside. I was going to start naming things, but lots of things that we use on a daily basis will be made in China. Obviously, if the cost of purchasing them or the cost of producing them, PPI down 2.5% year-over-year figure as well. So, obviously, if those things cost less to make, they cost less to sell. Obviously the inflation that comes down, and that will probably feed into the rest of the world. So you can only take that as a positive for global markets. I think for risk assets, I think at the moment, obviously, if the Chinese economy is performing poorly, but global markets don't really seem to care. I think what they probably will care about is inflation continuing to come down in China. Hopefully that feeds into the rest of the world, gets inflation down further in the rest of the global economy. Apart from that, some comments from Bank of Japan's deputy governor Ushida, suggesting that once Japan do exit their negative interest rate cycle, that they will not be hiking rates aggressively, as markets may have first thought. The Bank of Japan, pretty unpredictable central bank, did say to us in the last meeting that when they exit negative interest rates, they will go and hike further. Obviously, no aggressive hikes to come. Markets have kind of run with that and jumped in and sold the Japanese yen again, as you can see. Year to date, 3-month percentage change. Last 3 months hasn't been too bad for the Japanese yen, but last year they just got poleaxed across the board. So down across the board again today. Year to date isn't great, and as long as the higher for longer stance throughout the rest of the world continues, then the Japanese yen should continue to move lower. Global bond yields higher across the board. That is again another contributing factor to some downside in the Japanese yen. But apart from that, not really much to go off. FX is pretty quiet. US dollar mix. Bond yields are up across the board, but it's not really sparking moves across any of the other major asset classes. Commodities are a little bit mixed, as you can see across here. Asia Pacific equity futures, bit mixed. European equity futures are green across the board, although not green by much percentages. So I'm not going to read too much into that just yet, although you still would rather be long stock indexes at this current point in time. US equity futures, E-mini S&P, so the futures ticker, did break 5,000 in yesterday's session and trades above 5,000 now. The cash market did not. Still waiting the cash market to break through it. And we'll see if the futures, there's a little bit of a difference in the pricing, so it's not a case of we've moved higher in the overnight session. As you can see here, cash market hasn't managed to breach 5,000. Once you come back, have a look at the E-mini S&P futures. That's broke above 5,000 in yesterday's session about 3 o'clock. Depends on the futures ticker you look at. Obviously, they all have slightly different pricing. This one's obviously based off of the more based off the cash market rather than the E-mini, should I say? So the E-mini's above 5,000, cash market not. Whatever way you want to try and read into that, we haven't quite broken it. It does look like it's on. Certainly looked like it was on for a test. You have to imagine at some point all of these charts do get above 5,000, but you can see Chinese stocks have managed to hold on to their gains. They have not sold off and given back these gains from earlier on in the week as they prepare for a weeks-long holiday. in China. But I mean, say hold on to these gains. I mean, is it really any sort of a challenge holding on to gains if so you stay back buying and then they're just banned selling of stocks? It's not too much of a surprise that has managed to hold firm. With stocks across the board not doing much overnight. You can see the S&P, the Dow Jones, the Nasdaq, the Russell all over the place. The DAX, the Euro stocks, and the FTSE as well, which I did have here, is not doing too much either. You can see the US dollar across the board pretty choppy over the course of this week. It's not exactly an aggressive sell-off nowhere near on the US dollar. So kind of what we were looking for. We're looking to sell back into these kind of dollar block pairs, and then your dollar pairs over here looking to buy back into. Dollar yen has already gone. Is that going to spark a rally across the board? Let's see. The sell off in the dollar, more of a profit-taking sell-off than an active sell-off, should I say. So I still think buying dips on the dollar, decent bet going forward. And you can see bond yields kind of chopping sideways, looking like they're trying to make an attempt higher in recent trade, but ultimately they are sideways over the course of this week. So I'm not going to read too much into that just yet. I still think they probably have some legs in them to move back higher. Oil, bit all over the place, bit of a pullback in oil. Again, it just looks like market wants to sell back into that, but again, we'll have to keep an eye on that. You can see these inflation figures from China. Consensus minus 0.5, actual minus 0.8, PPI minus 2.5. So pretty negative inflation prints again, and likely to feed into the rest of the world. Do global markets take a bit of positivity from that? Let's see how they open up at 8 o'clock. Initial jobless claims, the only thing worth looking at on the calendar over the course of today. You've got a few speeches, Fed's barking, Bank of England's Dingra, ECB's laying, Fed's barking again for a second speech. So we'll see what they have to say. I mean, there's no point sitting waiting on these speeches. A lot of the time they are pretty much non-events unless the actual heads of the central bank are talking. So we'll keep an eye on what they say, but ultimately probably a bit of a non-event. Initial jobless claims, I wouldn't say it shakes up markets too much after that blowout jobs report last Friday. I don't think jobless claims would have too much of an effect, but we will still keep an eye on it once we get around to it. But I do still think US dollars worth buying back into, providing us with better levels to buy back into. Stocks, we're looking for upside in stocks again. They have continued higher. You'd have to back the S&P to get above 5,000 on all of these charts come to weekend. So we keep the same bias and we have this week, last week. Let's hope it proves fruitful come the end of the trading day today.